Today, we will talk about XLM and XRP as it relates to what is about to happen and call out some ties into the current macroeconomic environment. Because I feel like we have some kind of a quote unquote white swan event right around the corner. Primarily because the global liquidity cycle has just begun to tick up again. And on top of that, the exact same things that were happening in late October, early November of 2024, right before everything went parabolic, are happening again. And I'm not trying to say a black swan event won't eventually happen. I just don't think we will have a huge crash or some kind of a huge problem before we experience a huge pump. And one of the reasons for that is because of this.
Banks get to decide who their customers are. That's not our decision. And so banks are free to provide banking services to the crypto industry, to crypto companies. And banks are also free to conduct crypto activities as long as they do so in a way that is, protective of safety and soundness.
A lot of people thought that the conflict in the Middle East was the obvious sign that the whole black swan quasi-conspiracy end of the crypto community online was actually right. And I expanded upon that a lot in a video I did recently where it just didn't happen. And it appears as if that conflict is largely not happening how the mainstream media was trying to portray it. I'm also expecting some kind of QE happening soon. It might not look and sound the exact same way it did in 2007 or in 2020. However, I do think that we will have some kind of stimulus event happen here in the US and in a lot of other countries. And that's mainly because it's just that time in the cycle, which is one of the things that can be shown here. I think we are expecting at least 2 rate cuts in 2025, extending into 2026 for a total of 3. But I don't really keep track of that stuff because it's just not the most important thing on my mind. Here we'll get into a little bit of the legislative and the political environment, specifically here in the US, because yes, I am an American. However, it's really hard to ignore the fact that the US economy is one of the first things that unlocks a lot of other expansion in other parts of the world. In June of 2024, the House passes the Deploying American Blockchains Act, which is trying to incentivize and increase the US competitiveness in the crypto industry, probably primarily because it got held back a ton over the last 4 years. The US Director of Digital Assets has expressed that starting on July 14th, we should expect a lot of things to happen. And I don't trust that outright. It's a bunch of politics, but with the Genius and the Market Structure Acts inbound, it wouldn't really surprise me. Bo Hines, who is the executive director of that council, has also expressed that they are committed to completing the market structure bill by the end of September 2025, which is comparable to MiCA in the EU, which pretty much lays out how these networks and assets are treated in terms of the infrastructure itself and how that ties into the rules and regulations. And as far as the Genius Act goes, that should be headed to the president's desk in order to sign it into effect. The Clarity Act, which is the market structure one, is progressing from the House into the Senate, and it's mid-July right now. I would think it would take a few weeks to a month and a half in order to get that completed too. And on top of everything else, we have Elizabeth Warren actually talking about how we need crypto to strengthen our financial system. So she has been one of the most vocal people against crypto because of all of her connections and ties into the traditional finance industry and banks. And I did never really believe that outright because it doesn't make sense. Crypto is here to stay. And I'm pretty sure that all of the politicians and the important people out there have known that for a very long time. And it was all some kind of a political act. In terms of taxes, which are an unfortunate necessity when we're talking about actually rolling out this kind of a financial infrastructure and crypto and digital assets. The US Treasury has removed the crypto broker reporting requirements, which I'm not an expert on that, but it was one of the things that was really making it almost impossible for completely compliant DeFi platforms and brokerages to be able to record things in a way where the amount to actually be taxable would be calculated. So I'm not a proponent of taxes, but it is a conversation that just has to be had. I really think that a lot of what I just talked about is happening now because crypto is a technology. It's not an asset.
This is a technology. It's not an asset class. It will be used in many ways, including in tokenizing securities.
And that has really been the primary holdup so far, is that these politicians have been scrambling to try to hold on to their own power and have been trying to say that each and every coin is this or that, and it's ended up as a mess. And if we're looking at the crypto tokens and coins are just representative of another asset that actually has a lot of rules in place right now, it just hasn't made a lot of obvious sense as to why it's been so held back here in the US. However, the obvious answer is that it's all been some kind of a political stunt in order to provide certain people more power and time. So as we get into some talk around stablecoins, which I think is extremely important in the conversation here and with where we're at in the macro cycle too, because stablecoins are going to be the future of fiat. I just don't really think that there's any other option at this point. And Stellar is explaining how they refer to the stablecoin base layer as a checking account in this new kind of a financial infrastructure. And specifically regarding DeFi, it allows people to create more financial instruments in order to make these new quote unquote accounts equivalent. So the more stable coins that you're able to get, and in particular US stable coins, into the US economy and the economies of a lot of other countries out there, you're not only able to sustain or increase the strength of the USD, but you're also able to use it to create yield generating opportunities in all kinds of ways. And the more value that you create, the more tax that can be taken out of it in the eyes of the government. So they shouldn't really have an issue. I played the clip at the start about how the US Treasury has officially removed the crypto broker reporting requirements, which ties into the tax part of it as well. And all of that is coming out of the Department of the Treasury. And in my own humble opinion, just because I have experience in this area, until the politicians can decide how to tax an asset, it won't be legal. And it appears as if we're just about at that point. And I was explaining it a little bit with my commentary on that post by Stellar, but the real incentive is that because you're switching from the slower financial infrastructure that we have right now, which is expensive because it involves a lot of different people and parties, when we transition onto a blockchain infrastructure, that reduces cost at the very top, which then trickle into every other part of the economy. So we are seeing a lot of institutions, a lot of credit card companies, and a lot of payment processors trying to quickly integrate with these different kinds of crypto networks and infrastructure, because if they don't, then they basically become obsolete and it won't take a lot of time. I have talked about DCM a few times in regards to Stellar in Ukraine, but here, I really want to come back to stablecoins because I got a little distracted on the topic. The BIS has recently called out that stablecoins don't really pass core concepts of what true money actually is. And they put out a report, I think about a month ago, and they didn't really provide a solution or a suggestion, but one of the things that they've really talked about for a long time is tokenized deposits. And I've talked about that for probably almost a year and a half now, because in my own interpretation of things, if you can tokenize what is in a financial institution, then there's not really a need for a CBDC. Now, it's not that simple overall, and it could still happen, but a tokenized deposit, in my own opinion, is like a retail CBDC, where instead of having a single CBDC issued out of the government, you are just having all of your highly regulated institutions handle it. Here is a clip where the BIS is expanding on it a little bit.
I think as a society, we have to ask, what is the best way of arranging our monetary affairs that will, serve the public interest the best? I think for central banks, certainly, I think we have to be clear-eyed about what technology can bring, but also what the underlying economics is. So what is the desirable architecture that will actually be more conducive to the public interest? And within that context, provide the necessary innovation that allows the private sector, in particular, to serve their customers better. Now, I think it's a very important stage, in the evolution of the monetary system to be discussing, these types of issues, precisely because of the rapid growth of stablecoins, for example.
Here is a post on the topic of how the BIS has an issue around stablecoins, how it stands right now. And it's not a clip of anyone talking, but they are expanding more on how tokenized central bank reserves, commercial bank deposits, and government bonds could really transition us into this new blockchain financial infrastructure economy. And I really don't want to get into the report now, because the macro part of it is a thing that I have a hard time internalizing, but I'll come back to that, because companies like DCM, who created a network in Ukraine on top of Stellar, are explaining about how their networks actually meet all of these requirements right now.
But this is a payment mechanism, and not to be confused with Bitcoin or something that has a speculative component. This puts us into a digital payment framework, the fastest rails available, much better than the system developed in the 70s and 80s, which is slow. It takes days to clear.
So the issue, as far as I have always understood the stablecoin issue, is what is backing this stuff, and how much of it's backed by actual treasuries versus cash versus equities or something else. What does this say about all of that?
It's not going to be equities. It's going to be high-quality, short-term assets, either short-term U.S. treasuries or cash. I think the majority of it will be U.S. treasuries. In fact, what this will do, and the projections are by 2030, this is according to Citibank, stablecoin issuers will be the largest holders of U.S. treasuries in the world.
Which makes sense, because even though we have our own issues here, the USD is still the preferred currency out there. And yes, I know we have certain countries completing transactions in oil and gas without the USD, and I get that. I'm not saying that won't happen. I'm just saying that the easier we make it to convert U.S. assets into U.S. stablecoins, then the strength of the USD can not only sustain itself, it could even expand its control of the global economy, which really flies in the face of a lot of the Black Swan theories and conspiracies. Okay, so at this point, I want to talk more about what we're actually seeing in crypto right now. So especially since late 2022, we haven't really had a lot of upswing in the market until the last year or so. And a lot of the inaction in the market is not just with the global liquidity cycle. It is because a lot of these huge exchanges just manipulate things, and they control the price of almost each and every asset out there. So I won't get into that here because it's a complicated topic and I'm not a macro or a technical expert. But the important point is that once we get a market structure bill, then that is what will actually help us not experience that kind of manipulation, so that the true value of all of these assets on exchanges is able to come out a lot more. Right now, despite the fact that we're at just $118,000 or the price of Bitcoin, there's still really not anyone out there outside of X who is actually talking about it. In 2018 and even in 2020, when the price was a fraction of what it is now, the hype and attention was a lot higher, and we're just not quite at that point yet, which is actually an extremely positive thing, because if the prices are as high as they are right now, then that just means it should continue to increase. And that can kind of be shown here on Google Trends. So we've got crypto in blue, which has always been under Bitcoin. And it's really interesting because right now you've got almost the same amount of people searching for XRP as you have crypto overall. And especially over the last week or so, it really does seem as if we're at the point in the cycle where we have experienced a huge increase in the price of Bitcoin, and the market share as a percentage of the crypto market cap overall has topped. And from here on out, that just means that the rest of the market will be able to experience the same kind of run up. And in a lot of examples, the percent returns will be hugely higher. And it really all starts with Ethereum. BlackRock has purchased over $500 million of ETH in about a week and a half as of June 9th, 2025. So I haven't checked on that, but I would assume that that has continued, which is an extremely historically positive sign. Because when the value of Ethereum increases a lot and the percent of the market share begins to pull back, that is really historically when the rest of the crypto market has exploded. So things like XRP, XLM, HBAR, XDC, pretty much each and every asset that just is not an obvious scam, except a bunch of scams are going to pump too. Here is a chart of the stablecoin deployment. And it's being compared against the crypto market cap too. So as you get more stable coins being created and put into circulation as a percent of the crypto market cap overall, once that begins to turn up, it will show that there are more people transacting, which will just create more liquidity in the market. We also have an altcoin expansion signal, and I believe this is the total 2 or total 3 in terms of market cap. And this looks like Sai, if I had to guess. He oftentimes won't actually show what's on his chart, but we did just cross over on our way heading up, which should be a pretty positive indication that things will begin to look like that part on our chart and that part. As far as altcoins go, this is total 3, which does not include Bitcoin and ETH, and it is a 3-month chart. If you draw a rising wedge kind of thing, then we've pretty much topped out since right at about 2021. And that just shows that despite the price improvements in things like XLM, XRP, SHX, everything, it hasn't really even started yet. And once it actually sustains above this line here, that would be a really positive indication that it can continue to explode a whole lot. And in fact, as of right now, on Sunday, July 13th, we have just gone over 119K on Bitcoin, which I believe is another all-time high. So we are at an extremely positive point. We're over 3,000 ETH right now. We're almost at 290 XRP. The XLM is just really starting to turn up. We're at 46 cents there. And then we also have a lot of performance off of SHX, which just goes right back into, this looks exactly like where we were in October, November 2024, but our prices are starting out a lot higher.